Hello and welcome. I'm Herein, professional investor, and I want to welcome you to today's video. Today we're going to be doing a case study on a 32-unit apartment complex in Arizona. I call it the Arizona Oasis. Now, this is not an asset that I have purchased. This is just a case study of an asset that was available to me to purchase. I wasn't able to act on it simply because I just wasn't able to raise the capital quickly enough to make this deal happen. But I see these kinds of deals on a regular basis, commercial, residential, whatever, and I just want you to be aware of how they play out or how they could play out. So let's go through this case study and I'll walk you through a possible scenario on how this one could have played out if I had moved forward with it. We're talking about the amazing power of note investing, how to control and profit from real estate without owning it. You see, we have to understand that you don't have to own real estate or be a landlord in order to profit from the real estate. If you can control the debt on the real estate, you can really control the property and you can profit every single month from that real estate. So here's a photograph of the apartment complex. It's located in Florence, Arizona, 32-unit apartment complex. At the time, the market value for this particular complex was $1.4 million. The loan balance on it was $817,000. So the owner of the apartment complex has some equity in the property, which is good because when people have equity, they tend to make their payments because they don't want to risk losing their equity. The monthly payments on this asset is $6,459.17. That's based upon the remaining balance and the term of that particular loan. We could purchase this asset for $660,000. Now think about that for a minute. The balance on the mortgage is $817,000, but the lender was willing to sell their position for $660,000. That put our annualized return on this investment at 9%. You know, I like to say 8 is great, 9 is fine, okay? So if you have money, for example, sitting in a retirement account or a savings account and it's earning less than 9% and it doesn't have a $1.4 million asset as collateral, this investment would make a lot of sense. The day that you buy this asset, you would pick up $157,000 in equity. Now, what does that actually mean from a practical standpoint? It means literally that your net worth has increased by $157,000 the day you buy this note. And you would have picked up $77,500 a year in cash flow. I mean, that's a powerful position to be in. So suppose after buying this asset, 2 years in, the owner of this particular complex decides he wants to sell the complex and they put the complex up for sale. Now you've received 2 years of payment. So that means you would have received $155,000 in payments during that time, right? However, at that time, the owner of this apartment complex would still have an outstanding mortgage balance due to you of $753,000. Wow. So if they sold this complex, here's how it would play out. You would have received $155,000 in payments. They would pay you an additional $753,000 because that's your payoff. So the total cash that you would have received on this asset is $908,000 in a 2-year period. Considering that you only invested $660,000 and in 2 years your 660 grew to 908, that works out to be a 26.2% annualized return. Holy smokes. You know, banks right now are paying less than 2%. The stock market isn't performing anywhere near like this, and there's no collateral in the stock market. Why aren't you doing this, right? Why aren't you putting your money into real estate the way banks do? Think about this. Banks are masters of money, and banks don't flip houses. Banks don't own rental units or build subdivisions. Banks lend. They understand that the money is in the money business. And so that's what they do. They earn big returns. They control the property. If they don't get paid, they get the property, and then they can do whatever they want to do with it. And that's exactly what you can do as well as banks. So you can do that as a mortgage note investor. That's how I invest. That's how I help others to invest. Why aren't you doing it? Why are you sitting there putting your money in the stock market, putting your money into gold, silver, other assets, leaving your money in a savings account, an IRA, a 401k? Now, by the way, you can do this with IRA money, with 401k money. The IRS allows it. You don't have to cash out your IRA or 401k. You can literally roll it over into this asset. We can show you how to do that. If you want to know more, then you need to make the next move. You can contact me. My name is Desi Arnaz, and we can do a 30-minute consultation. I'm happy to do it. And I'll explain to you how this works. I'll help you get yourself in position to pull the trigger on one of these assets if something catches your fancy, okay? My website is investbrilliantly.com. And on the website, you can actually schedule a 30-minute consultation with me. There's a button there to do that. Just go to my website and let's talk. Thank you very much. God bless you guys. I'm so happy that you watched this. I hope you found it intriguing, and I hope, for your own sake, that you'll take action on what you just learned.